Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for September 22nd, 2025, Monday. Markets hit more new highs on mega cap enthusiasm. I woke up early in the morning in Vegas. Futures were down a bit. Some of the quantum stocks selling off, and some of the data center stuff showed weakness. Then, as the day went on, the markets firmed up. You had the announcement with um, NVDA and OpenAI, and it sort of caused the entire data center uranium complex to go up and brought the market with it. So strong day again. And again, my name is Jeffrey Scott, marketingmripro at gmail.com and Google Group's top-down trader. This is for educational purposes only. Anything I talk about should be taken in the spirit of education and not considered investment advice. The intent of the video is to take my tools and show you how I use them to um, trade from a top-down perspective. As I talked about over on the weekend, and if you want to see the supporting evidence, I showed you my account for year to date. I showed you my equity curve since the bottom that I called on April 7th. And I'm not making a big deal out of calling the bottom. I don't think it was that hard to call. But the power of growth stock investing at market bottoms can't be denied. All right, the intent of the video, again, is to show you how to use the tools. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in the report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I've got tools in many platforms, TradingView, TradeStation, um, Wealth Chart, soon to be MetaStock, and then my freestanding Market MRI Pro app. I have a Google group for you, for anybody. If you own my tools, if you're interested in top-down trading, if you like my jokes, I don't really joke that much. It's free. You get a discount if you buy anything outside of some special sale days. Go to Google Groups, go to all groups, find the group you want to join, top-down trader, and let us know how to contact you. Just reminding people once again, I have a live meeting in Palm Beach, October 26th and 27th at the Marriott Palm Beach Gardens, 2 days packed of education, software instruction. Um, if you want to attend, it's $12.50 either live or online. Breakfast, lunch on Sunday and Monday. Dinner will be on me as well on Sunday night. We either go out for a cruise on my yacht, Stocks and Docks, or we'll go out to a nice steak dinner. Again, full service Marriott's $155 a night. Email me for the code for the hotel. And if you want any more information, probably will be a small group live, few people online. Um, I never have big seminars. I've had them in the past. I prefer them to be a little bit smaller. Bigger than we are right now, so hopefully a few more people will come. If you join, you get of your 1250, I'll rebate you back 400 towards any of my tools that I can control price in. If you don't already have my Market MRI Pro app, you'll be able to apply the $400, the $100 top-down trading, and then 200 for any of the programs of mine you've already bought, such as the wealth charts or the trade station, and that gets the price down for the first year. It's lower thereafter anyways. And you don't have to wait to the meeting to get the tools. Once you've paid, you trigger the rebate in your account for when you want to purchase something else. I mentioned over the weekend that I thought there were like 15 or like a dozen. There's 15 different Fed speakers. I think we already saw it today. You're going to have some like the last guy appointed by Trump that wants to get us down to 2% and are very dovish. And then you have others that think the rates don't need to come down at all. So I expect the market to go with the ebb and flow. Probably the most important one will be on Wednesday when Powell talks again. I think the markets took the Fed meeting as very dovish, and sometimes they don't like that, and they talk it back over the next few days of trading, or of the next few days of talking rather, which impacts the trading. Don't forget jobless on Thursday, PCE on Friday. On the calendar, you have not a lot of earnings this week. Big one tomorrow night will be Micron. A lot of expectations there. They've had a recent big run. KB Homes Wednesday after the close give us a sense of the home builders. And then Costco, a wonderful franchise, always seems to me to be overbought and at least overpriced on Thursday. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Now, people know I like seasonality, and seasonality can be applied to stocks, it can be applied to markets, and sometimes it can be applied to holidays. I am Jewish, and starting tonight at sundown, so it's already started, we celebrate Rosh Hashana. Rosh Hashana is the Jewish New Year. It's a happy holiday. And usually about 10 days from the start, I think it's 10 days, I should know that, but I always will do what my wife tells me. We have Yom Kippur, which is the Day of Atonement. The Day of Atonement is a solemn holiday where we celebrate on Rosh Hashanah. We fast and we have a lot of prayer and introspection on Yom Kippur. Why am I telling you this? Besides, I may miss a few videos this week. There is a long adage. You sell Rosh Hashanah and you buy Yom Kippur. So if Rosh Hashanah starts in the American calendar, English calendar, and the morning tomorrow, the Jewish calendar starts the night before, that says the market might be lackadaisical for the next week, and then you buy the Yom Kippur holiday. Why would people do that? Well, I can tell you that the percentage of Jews on Wall Street probably far exceeds the percentage of Jews in this country, and a lot of them take off. A lot of them are very religious. So sell Rosh Hashanah, buy Yom Kippur. It has worked in the past. More information about Market MRI Pro or anything that I do, reach out to me for any reason. Just reach out to me at marketmripro@gmail.com. And if you have any issues with the software tool, setting it up, error messages, Windows thinks it's a virus, which can occur. It's not a virus, I can assure you of that. Um, all you got to do is let me know or let Praveen know. That's a better, I should say that, and he can get you all fixed up. Now, speaking of Praveen, and I'm trying to find where I put it on my computer, so give me a second. Praveen did a launch this weekend, and the launch this weekend really, I thought, did a lot on explaining the user list function, which he's done some massive improvement on. It is called User List Help Market MRI Pro, and you will all be getting this. I think there'll be an update coming. In this, he goes over in great detail on using different lists, how to add symbols, whether you're importing them, pasting them, how to delete them, how to move symbols between lists, and how to add or rename or delete user lists. So if you don't have this, I will try and remember to attach it as an attachment to the top-down trader um, Google group tonight, but you should be getting it soon. It was a great help to me because he did some changes and I didn't know where everything was. And if I can't figure it out, I'm not even going to ask others. At least I have access to Praveen on speed dial. What about Monday? Volatility led, that's never a good thing. Russell was up zero point 0.6, Q's 0.48, Spider 0.46, the Diamond's 0.17. All these are new closing highs. I believe they're all new closing highs. We'll verify, but I believe that would be true since we ended the week at all-time highs. You could see on the equities and on the volatility, we finished on the upper part of the day. Dollar was down 0.36 after several days of going higher, finishing at the bottom. Bitcoin was down 2.6. We can see the new highs minus new lows of the NYSE has dropped below 100, and interestingly, the Nasdaq is holding above 100. On the S&P 500 sectors, technology, the big winner, utility second, and that's a big data center play with the electrical generators. Weakness, staples, energy, communications, which has been strong, that's a change, and materials, healthcare down 0.5% as well. If we look at what sectors were working today, silver miners, artificial intelligence, gold miners, data centers, clean tech, semiconductors, uranium, even biotech. A lot of things up 1%, more than 1%. The bad news as you look at the breadth, only 48% of the S&P 1500 were up. That means over half were down. 54% of the NASDAQ were up, which means almost half were down. And 51% of the NYSE, sort of a break-even day of ups and downs on the NYSE. If we go to the timing brief, just very quickly, no change in the timing model. I'm not going to show you the weekly or the monthly. They all remain green, and you could see the day we had on the daily, and you do see all-time highs, closing highs, except on the Russell, where we're still a little bit below where we were on Thursday. If we look at the US index ETFs, I'm not going to go in as much detail tonight. You can see a strong close, closing at the high, up on the spiders, 0.47, similar on the Qs, 0.48, and similar on the diamonds, only up 0.17 though. Kind of a bullish engulfing day. If you look at the Russell, closed at the high, certainly up on the session, up 0.6%. Still hasn't, the all-time high was hit on Thursday. VIX volatility actually jumped on the session, up 4.21, while the dollar dropped some. My thoughts on the market remain the same. I will show you areas of clear divergence and why I am concerned about what comes next with this market. That doesn't mean it can't get higher and higher before it corrects. I also feel that with the 17 days in green and the 50-day and that white line underneath the green, so close to the stocks, that wouldn't it be most likely that we have a 4 or 5% pullback to major support and bounce from there? So I'm not looking for a big sell-off. If we look at the commodities, big day again for gold and silver. We talked about them last night. Oil breaking below the 200, natural gas breaking down, and small moves, but positive day on the 10-year up 0.15 and on the 30-year up 0.11, but really not significant changes. If we look at the buckets, it's interesting because you could see on the NYSE we got 10% below, but we also increased the stocks above. We've got 13% below on the S&P 1500s. These are both kind of weak to neutral. While the NASDAQ has got 9% above and very few below, kind of stronger to neutral, and the Russell's kind of flat throughout. So not a story here. I would say it's still neutral. Market breadth, you could see all-time closing on both the NYSE and on the NASDAQ composites getting extended from their 50 and 200s. You had volume was not out yet on the NYSE. Didn't look like a big day on the NASDAQ. That wouldn't surprise me because we had really high volume on Friday, get my days straight, which was options expiration. So probably no surprise. I'm just checking my source on Market Surge, which is the former Market Smith site, and shows NASDAQ volume was down 33%, NYSE 38. I'm not saying anything, but I wonder how much of that's not Rosh Hashana starting. It starts at sundown Monday, so probably a lot of the more observant and religious Jews on Wall Street probably didn't go in today. They're probably out in their Hamptons home. Notice that stocks above the 20-day in green, 50 in white, 200 in red are trending down in the NYSE as the market hits an all-time high. That is a divergence. At best case sideways, but we're not as high as we were back here on the NASDAQ stocks above, but we're at all-time highs. More divergence. Also had Bangos today, which is rather an indiscriminate buy everything type of a day. On the other ratio charts, or excuse me, market breadth, you could see stocks above are the 13-week new high, new lows, 4.49, 0.75, 0.54, 0.77. No signals, but they are falling as the index has set new highs. I would say again, another sign of divergence. If you look at the AD lines, they're all lower than they were when the market was considerably lower. Again, divergence. So as these divergences pile up, I do believe the risks of us seeing a more significant pullback, or at least that correction I mentioned, become greater. So again, my gestalt is that markets are incredibly strong right now, which is a great thing. That, however, even though I think they're strong, I do think those divergences tell me that we're probably going to have somewhat of a pause or a small correction before we have the rally into the end of the year. And yes, I do think we rally into the year and that we see higher highs. Kind of a big believer in that, actually. Um, and so I'm still playing the market to the long side. I've had a incredibly strong year. I showed you my brokerage statement equity curve over the weekend. Literally 388% since the bottom of the market, just showing you the power of growth stock investing at market turns. They don't happen often. I think of my best trading periods of my life occurred after March 9th of 2009, around March 21st of 2020, post-COVID. And I guess this is the third of my major winning market turns. Now, I refer you to the weekend review where I go into detail, plus I go over what we're going to talk about, what I'm going to teach you in the meeting in Palm Beach Gardens. The market is so important, which is why I trade from a top-down perspective. And you just got to know, as Kenny Rogers used to say, and Ian used to sing at our meetings, you got to know when to hold them, know when to fold them. Sometimes I'll just add this: when when you got to ride those ponies. And I called it April 7th. I did it on a video, and the market's gone up ever since. Not forever. It's just been a heck of a good run. Ratio charts tell me that of late, communications and technology have been leading. You can see how weak the staples are. Energy is pretty weak. Um, Materials are weak, industrials weak, utilities, real estate, energy, even Bitcoin. It's been communications and technology, although communications took a little hiccup today. The JS layout is where I do my work once I've decided what direction the market is in. And I've designed it so that you can do whatever you want to do. And I want to change it so that it comes with very few program windows preloaded. All of them will be there to load, but I want you to make it your layout. But for me, I start with the top down. Here are the different sectors. First, let's look at performance. Hey, Jeff, they look different than they did in the S&P 500. Of course they do. I'll show you how many stocks. And those sectors are 4,186 stocks. So this is a very broad look. And one thing about the market, let's look at the RSP. We know that the spiders are at all-time highs. And the RSP it's not bad. It's tracked the spider, but it actually had a very negative day today while the greater market was stronger, which means the broader market is weaker than the mega caps, hence my comment on the title. Top three sectors: utilities, and again, think nuclear and electrical producers, tech and healthcare. Okay, these become the top industry groups in those top sectors. Let's rank them by percentage change. And let's just take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. This is where I'll fish from. There's 657. That's too many for me. So let's go in here. I don't want anything less than $5 or 500,000. And frankly, I don't want anything that's below the 200-day moving average. It gets me down to 202. Now let's rank them by the number of, well, I can rank them by percentage change. And we'll just go through these. This was a buyout. It helped healthcare, helped biotech today. Pfizer buying this little company for some obesity drugs. Qualigen, don't know anything about it, but a really big move. Now you can check up here 2 ways to find out. You go up here and you could see the last earnings were 625. They don't report all the time. It's a small company, very small market cap. I'd probably pass just because of that market cap. I'm still curious. Was there news? In strategic investing of $41 million from Faraday Futures. I have no idea what they do. Shared electric mobility ecosystem. It's a cheap stock, not what I'm going to chase. MTSR. Come on. Fortunately, I'm not in a hotel room anymore, but sometimes some of these stickers get slow. Well, my bad. It was not MBX that got bought by Pfizer. It was Medicera. And how do I know that? Because I looked in the news here. So this was a buyout. Kodiak Science had a big upgrade. Beautiful picture here. I mean, you got a cup, a handle, and a breakout. It looks phenomenal. Look at the volume. You had a volume breakout, the double momentum from a squeeze with great relative strength and OBV. My only problem is how do you buy that? Where do you put your stops? That was a huge move, and it's a little bit extended, but that looks interesting, and I love the cup and handle breakout. Well, I wish I wasn't on a plane all day. That's one that if I saw during the day, I might have bought. APLM, Apollo Omics breaking out again, a cheap stock, not so cheap anymore. These are all healthcare stocks. IN, I could probably figure out what that's involved in. No news. Last earnings were in August. Has not made money. It's got a market cap, teeny weeny market of 100 million. No dividend you'd expect. I don't like cheap stocks like this. I do love the stair step way up. Broke out above the 200, expected to pull back and then go much higher. WLDS, wearable devices, big pullback, starting to move. So I'm not seeing a lot that I love here with this. AXTI looks interesting, but it's a $5 stock. So how about if we do this? Let's go add pullbacks in an uptrend. That'll make the list even smaller. And we've looked at the first ones. Look at PLNC or FLNC. Talked about this over the weekend. I have to go see if I got filled. Cheap utility stock. It's done horrible forever. Um, it's been selling off, but it's moving. And I had to put a buy stop in. I think I got filled. I'll have to go check. But I like this. We talked about yesterday. It broke above the 200. A big move here. Traded higher. This one I like. And notice that this was on over the weekend, the two momentum signals in a row. TER, Paradigm, nice uptrend, pullback, big breakout. Getting extended. It's at 100. SKYT, Skywater, broke out from this pattern. Um, Still relatively inexpensive stock. So one of the things that Praveen built into the program is you can click on, excuse me, these titles in the news and you'll get, I don't know anything about it. It's a semiconductor play. I would do my research. So I'm looking here for the perfect setup. I mean, pretty damn close, excuse my French. Pullback breaking out here. Out of a squeeze, great move relative strength and OBV. It's just extended. Now, should I ignore the extension because it sold off like that? Maybe I should. I'd certainly want to do more research. I'll tell you, you notice how many of these are healthcare. Most of these are biotechs. And the way I'm playing it, because it's so hard to know these little guys, is I just bought LABU, which is in a nice uptrend here and broke above the 200. Anything that I see as I go down here, got Ambarilla, what a great old name this was. Pullback, a breakout today. So there's quite a few things that look good on this. And there's Rambus had a good day as well, breaking out and running. So that's top-down investing. I'm not seeing stocks that blow me away, but just because they're not blowing me away, it's because a lot of them are lower cost healthcare stocks. So I always look at the top sectors. Um, let's see, hold on. One second. All right. Sometimes what I'll do is I will just look at the top industry groups, in which case I may pick up things that are not in the top sectors. I know that EME is one I looked at over the weekend, and look how beautiful this is. Nice sideways move into the 50 and a breakout. This is one that's probably actionable right now, EME group. Now, one of the ones I talked about in my top five or so, and it was probably closer to 12, was GEV. I love the pullback into the 50, and it had a person buy, which is not part of my package, and had a breakout signal today. This one looks to be like it's getting ready to go. Energy, electrical energy. So let's kill all these stocks. All right, and let's go back into the top down and let me show you actually into the impulse. And here again is those 40,000 stocks. Well, I've got my filter on, so 4,000, I'll make them 4,000 again. So I will repeat what I just did on the bigger list, and I'll go pullbacks. I will go price, volume, and above the moving average, hit OK. Rank them by dots and start looking. Premier Inc., these are a group purchasing organization supporting hospitals. A big gap up. Here's that MTSR, the buyout by Pfizer. Rivian, actually been moving nicely of late. Pros Holdings, I don't know what happened. This is one that I looked at over the weekend. Here's your double signal. I'm looking at the stock and going, it's so far below the 200, it's not that exciting. This is what it looked like. So I can get it to the right place over the weekend. And I'm looking at it, I'm thinking, then look what happened today. That was Friday. And then today it just gapped up here. Was there news? Palmo Bravo announced an acquisition today. Well, who knew what was going on because somebody was accumulating stock with those two Momo dots. ODP, Consumer Cyclicals, also gapped up. Probably another acquisition candidate. Parent to acquire. Okay. MaxLinear, a semiconductor. Um, Interesting. In process of potentially breaking out. Anything else that I really want to look at? VST is an example of these energy stocks. I've been in and out of this one. It had a huge run, broke out here, and it's running again. That was one that looked good. And how about NVDA? Yeah, I'll tell you the funny thing, and I was going to say it yesterday when I was going through my portfolio performance. I have not traded NVIDIA in my model portfolio this year for a simple reason. It is by far my largest position in my long-term accounts. And so I ignored it from that perspective. But boy, oh boy, it was up 694 today after that announcement with OpenAI. I believe over the weekend I talked about it as being one that looked like it was getting ready to go, and it certainly went. Why did I show you my performance? There's lots of people on YouTube. You listen to them, they all know everything. Hell, you've been listening to me, many of you. If you come to my live meeting, I never showed you my performance before. What I showed you were a series of stocks and the trades that I took so that you got ingrained in your heads what the pattern was. And then I talked a little bit about trading the options. Well, I think it's important that you know how I do. That's why I shared that with you. That's why I did that model portfolio this year. But that's what I'm going to teach you how I did at the meeting in October. No guarantees. No one says you're going to make money. I can't predict what you're going to do, but I want to give you the tools and the intelligence so you have a fighting chance. So that's why I shared my performance. No, I'm not up 188% per year every year in my trading. Those three turnarounds, yeah, those were big days, big months, big years, months, days. 20, this one here, and '09 were amazing. All right, sometimes I just don't want to do a top-down analysis. Oh man, this looks gorgeous though, just looking at it. Sometimes I just want it easy. So I built in a secret weapon. And my secret weapon is this 2 days Momo up. And let's put in the price and the volume and above the 200. And let's even put the weekly bongo up so I know you're in an uptrend. That is going to cut some of the things down. And let's see, we got two stocks made the list. EXK. See that? Let it come up in a second. All right, so the first one, EXK, is a silver play. And I showed you gold and silver. And the thing that was interesting is a lot of them have big earnings growth. This is a small one, you can't really tell. Revenue, if it gets 1621 and you compare it to the last November when it was 5, that's a pretty big jump. It's a small silver play. I'd rather be buying one of the big ones or the ones that I talked about yesterday, um, GFI and KG, Kenross Gold Corp, KGC. AEG, that's Aegon, AEG, I think it's an insurance, nice uptrend. And what we're looking at here are these two momentum dots. I have learned not to question why, but when I see those two dots, I look to see if there's a supporting pattern because somebody knows something, just like that acquisition from today. This was maybe too tight. Let's take off. Let's redo that. And let's just look at price volume and the two dots and see if we get any more. OSR, restaurant software, not that exciting. And then this guy's been on every day. It's an IPO. So really, maybe that's telling me a story too, because that's one of the lowest number of two dot plays on an update that I've seen in a long time. So what I think you should be doing right now, I think you should be looking at your portfolio. I think you should recognize that we're in a time that the markets can still move higher, but the risk is increasing. I think that PCE on Friday could move the markets one way or the other. I think it's a good time to be raising a little bit of cash, selling some of the losers, tightening the stops on the winners. I don't feel the need to be going out and buying a lot. Now, I might look at what happened today and go look at that Kinross gold and say, if I think gold is still going higher, still a fresh breakout after this pullback, I might be looking at some gold. Um, I do think the market goes higher, but as I mentioned, the divergences and others um, are telling me to be careful. So trim, raise your stops, and I'll see you probably Wednesday night. I wasn't supposed to do a video tonight, but I forgot to tell you the Rosh Hashana story, and so my wife let me do it. Um, I will attach the user guide on the list in the top-down trader group. If you have any questions, give me a holler. The other thing is go back and watch my weekend videos. You'll see what I'm going to do at the live meetings. Maybe I'll get you excited to come and talk to you soon.